Welcome to the Theo video for Tuesday, February 16th, 2016. I'm Jeff White, and today we saw something interesting take place in the market, which was our second straight advance here in the SPX, where it closed right at its high of the session. You can see, kind of these long-ranging bars here of the last 2 days, and we finished right at the highs in both cases. So going back to Friday's session, we closed at 1864.78. That was the absolute high of the day. Today, the high was 1895.77. We finished just a very small fraction of a point off of that high, still at 1895 though. And we've had 2-day bounces before, so by that stretch, it's nothing really to get excited about. But in the case of the SPX, you really have to go back a considerable amount of time to see this type of a move right here. And we're getting a significant advance to this degree, as well as closes right at the session highs. And really, the last time that we saw that on back-to-back sessions in the S&P was right back here. And that was back here during the rally off of this September high. Now, there are some similarities and some differences back then. Of course, back then we had kind of come down into the area of this August low, and we held narrowly above it. So by that measure, it did have a little bit of a higher low. And in this case, we did just briefly undercut last week that low from January in the S&P, which was at 1812. We got to 1810 on Thursday's session. And so, it's a little bit different by that measure. Another point of consideration is that right now, price is currently, it's sitting right here. Okay, and the closing high right back here was at 1940. So we're still some 45 points off that closing high that took place between these two lows. Going back to August versus September, the closing high back then versus where the previous bounce closing high was, that was only a difference of about 8 points. So we're still a considerable distance from there. So those are both a couple things to consider. However, by any comparison, this rally here off of the low from Thursday intraday back here at 1810 has no question been impressive. This index is now up 4.7% here off of that low, and that's just over the course of 2 days and change. And so the buyers really on both of these days have apparently run out of time before they've run out of cash, which is to say that they rallied all the way into the closing bell. And so when you're getting closes at the highs of the day, that's really what that typically indicates. And while that doesn't at all guarantee a single additional point of upside going forward, it does at the very least point to a little bit more upside conviction than what we've seen here over the course of just the past few months. And so it is of interest. Now, other market interesting notes out there, you've got to turn to things like crude oil. And you look here at an intraday chart here of crude oil. If we go back here, let's look at this 5-day, 5-minute chart. In fact, let's go to a 5-day, 15-minute chart. So this Thursday low back here, interestingly, this coincided with that break of the S&P at 1812. So as the S&P started to make fresh new multi-year lows, crude oil was making lows at that point as well, and suddenly there was this chatter on OPEC maybe cutting production, and so crude oil spikes and the market spikes as well, and we lift off the lows of the day. We continue higher into Friday. Now, of course, crude actually rallied all the way up here, more than 5 points and change. So it's $5.48 here off of Thursday's low into the overnight high last night. That's an enormous move. But then since then we've seen obviously crude oil backing off considerably into today's close. That's of interest for a couple of reasons. The timing of that OPEC rumor and stocks turning higher, very curious in itself. But to see crude oil turn and take the market and especially financials with it, that's of interest. But take a look at the intraday price action today. There's been a big disconnect. So crude oil trended lower here during today's session. Stocks, they were able to trend higher. Even the financial ETF, the XLF, did not trend lower to the extent that the that crude oil did. So it was able to actually finish not far from its high of the day as well. So that's notable. If you look here at the daily chart of bonds, and we've seen that they've continued their pullback off this 170.26 high just set last week. They closed here, 5 points lower here. And so by that measure, it's coming back more in line with this uptrend line that we've been watching that goes back to the beginning of the year. And so, something that was notable here to me was just the proximity in price from the high last week to where this uptrend line was. And now the proximity in price to this uptrend line, the difference here is amazing. And so price has come back much more in line just with the general pace that it's been moving at here to the upside over the past 6 or 7 weeks. And so that's notable here. But we've still got a little bit of space here for price to possibly come back and test this trend line. But do not be in any hurry to write off bonds here as being completely done, because they are still in the midst of a rally and just being 2 days removed from that recent high. If stocks come under pressure again, and they may, we could very easily see bonds resume their rally. And so, don't be too quick to write this off. Another area to look is gold, which has also seen a tremendous pullback here in just the last couple of sessions. It got up here to, this is the gold ETF, it got to 120.84. It's now pulled back 6 points into today's close of 114.77. And so, there's some talk out there of, this possibly being a little bit of an island top. But whenever you're seeing a market that moves with this much speed to the upside, a little 2-day pullback is not necessarily something to balk at. And so while this is a much deserved rest for gold, and you're seeing this in many gold-related stocks as well, and in gold futures, the fact is that momentum players are still every bit as present here, and they're unlikely to just walk completely away after seeing a move of this magnitude from this 106 area breakout that we've been discussing in the chat for the last couple of weeks all the way up to 120. So, enormous move to the upside. So to see a little bit of a give back type of move, not a huge concern. But you know what? The big issue right now is still this recovery attempt that is underway right now in stocks. And, although some traders really are fixated purely on this initial bounce, and it's still developing at the moment. But some people are placing their full attention on just how long this might last or how far it might carry. In reality, what I think is going to be the biggest tell for this market is going to be the next dip. I think that the next pullback really is going to be the thing to watch. I mean, is it a quiet type of pullback? Do we come down in kind of a choppy type of fashion that really kind of indicates that maybe there's a bid beneath this market? That would be different than what we've been seeing. Or, is it more of a kind of that violent type of move where we just kind of nosedive here and we see heavy sell-off type of price action like we've seen in most other sell-offs in the last number of weeks? Because that's what's going to be what would produce another spike in fear, not just in the VIX, okay, which is sitting just above 24 right now, but also, that would be evident in horrendous breadth. We'd see large point declines like we've been getting many of lately, and mainly we've just be seeing that nonstop type of selling that all the recent declines have been marked by. They've not been marked by minor declines. It's just been kind of that steady all-day kind of downside trend day type of price action that we've been getting. And so that's another thing that we're going to be very tuned in, paying very close attention to here in the days ahead. So, play this bounce, watch it, don't discount it, okay? Because we've lifted here a significant amount, 85 points off the low from Thursday's intraday low. But perhaps, just be willing to suspend judgment here until the next pullback does arrive. And that's the point at which we're really much more likely to get a better feel for whether or not the underlying health of this market has actually undergone a change. So, in the midst of an ongoing market correction, the bounces, they can be really sharp, and oftentimes they are. But when markets are correcting, and we're only 2 days here removed from a fresh new low, so we are still in the midst of a correction, it's not the bounces really that matter, it's the declines. And so that's going to be the place to devote our attention here in the coming days once that little pullback, the next little selling wave arrives. So far, all we've seen here is an initial bounce, and it's going to take a lot more than this to change the prevailing mood out there, and therefore the technicals as a byproduct. So the test is holding for now, but it's going to be the next pullback that tends to matter much more than this little 2-day bounce that we've seen so far. All right. Thanks a lot for stopping by Theo Trade, and we will see you in the chat room on Wednesday. Have a great night.